Hello, this video is all about broker statements. We don't want anybody to be afraid of broker statements. When you see one, we usually start seeing them the first or second week in March when most brokers mail them out to taxpayers. In our district, probably about a third of our taxpayers have broker statements and a Schedule D. Unfortunately, the IRS does not require consistency, so broker statements vary from payer to payer. There is consistency. Most are going to have on the first or second page a 1099 div or INT, forms we're familiar with. There might be an OID for original issue discount, and then there will be a 1099B, which is a form for reporting the transactions of capital gains or losses. Here's an example of what the first page of a broker statement might look like. It starts with a 1099 DIV and it has an INT. And you'll see that all of the boxes that you would see on an individual payer's form are there. You would just highlight these numbers and then go to TaxSlayer and enter them just as if you were looking at an individual DIV or INT. Could be on the first page, could be on the second page. You might see a 1099 miscellaneous, a 1099 OID. My experience is that you will rarely see anything other than zeros. You will want to look at the 1099B. Again, that's where they report the transactions when they sell stocks, bonds, mutual funds. And on the first or second page, you'll see the summary of all of the transactions. You'll see short-term transactions, basis reported, not reported, long-term transactions. We're going to go into what that means in a little bit. Again, the data is there, but they don't always look the same. The INT and DIVs are easy. Just go to TaxSlayer and enter them like you would an individual form. Make sure to highlight all the boxes you want to enter so you don't forget anything. The 1099B, we're going to do a little bit more work before we enter data into TaxSlayer. I'm going to digress for a little bit. Why is this so complicated for reporting transactions? So before 2011, there used to be only a Schedule D, which had a part for long-term and a part for short-term transactions. Brokers reported only the sales price, the proceeds, to the IRS. So somebody thought maybe taxpayers weren't being totally honest. So a law was passed in prior to 2011 that required the reporting of cost basis starting in 2011. Nothing's easy. It was phased in. So, for example, in 2011, brokers started to report cost basis for individual stocks that were bought in 2011. In 2012, they required the cost basis to be reported for mutual funds that were bought in 2012. And it wasn't until 2014 that they required the cost basis for individual bonds. Anyway, the capital transactions are now either covered or not covered by the law. If they're covered, it means the broker has to report the cost basis if the item is sold. If it's not covered by the law, they don't have to report it to the IRS. Now, we almost always see the cost basis reported on the broker statement the taxpayer receives, even if it's not reported to the IRS. So as part of this new law, they created a Form 8949 for each of the individual types of transactions. So you could potentially have up to 6 of them, and there are boxes on the 8949, and I'll talk about those. We see usually three types of transactions now: short-term reported basis, which is box A; long-term basis reported, that's box D; and then long-term basis not reported, that's box E. There are some rare codes. Short-term not reported, box B, I don't think those exist anymore because everything's now covered if it's short-term. Sometimes the broker doesn't know the holding period. Taxpayer may have transferred their assets from one broker to another, and the cost basis and when it was bought was never transferred. And then sometimes transactions are not reported to the IRS. I've summarized all of that into one chart. You can see here short and long period across the top, and whether it's covered or not covered in the rows. Let's look at a sample summary of 1099-B. Again, you'll see this on the first or second page. This one happens to show that the taxpayer had some short-term transactions, and they had some long-term transactions where the basis was not reported to the IRS. The detail is going to be in the broker statement itself. And again, sometimes you'll see broker statements that are 20 to 30 pages long if there's a whole bunch of transactions. Now, on the broker statement, the proceeds columns are added up, and that number is always reported to the IRS. On the cost basis side, it's only reported to the IRS if it's a box A or a box D. Now you can use this summary page to do a quality review. If you look at the Schedule D on the printout, you can match the boxes and the proceeds, cost basis, and any adjustments in the capital gain. So you would look at the summary 1099-B on the broker statement, compare it to this Schedule D printout. You're going to want to look in the detail of the broker statement. So for example, you would have seen, this happens to be a statement with box A. You would have seen these summary numbers at the bottom on the first or second page of the broker statement. And now you're going to go find those same numbers in the detail. Now, each transaction is reported on the broker statement, and then it shows the total. People have a different rule of thumb about whether or not to just enter the total that you might see on the summary or enter individual transactions. A lot will depend on how quick you are at entering data, how busy you are at your site, any guidance you might get from the local coordinator. However, if you do enter a summary and not the detail, additional form is created. If there are too many, you'll just enter the totals, but you have to do an adjustment code M in TaxSlayer to tell the IRS that you're reporting summary transactions. That's going to generate a new form, 8453. If the IRS wants to see the individual transaction detail, they will send a letter to the taxpayer saying, I want to see the detail. So you would tell the taxpayer, if you get a letter, make a copy of your broker statement and send it in with this form I'm giving you. This is very rare. The other adjustment code we almost always see on a broker statement that we have to enter is a code W for a wash sale. That's when an item is sold, but it's bought again within 30 days. If it's sold for a loss, you can't take the loss. We need to talk a little bit about Pennsylvania. If there's tax-exempt interest or exempt interest dividends on the broker statement that you enter, you need to make some adjustments for Pennsylvania because they don't tax things the same as federal. Usually the broker statement will have the detail you need to do the adjustments in Pennsylvania. There is a separate lesson available for you on that. Also, Pennsylvania requires 2 Schedule Ds if it's a married filing joint return and there are holdings that are not joint. One of the reasons for that is if one spouse has a loss and the other has a gain, you can't use the losses that one spouse has to offset the gains of the other. So in closing, again, don't get intimidated by all the pages. You're comfortable now, you know what you need to look for. Start with the first or second summary pages, and then you'll see if you need to go further into all the detail. Ask for help. If you have a mentor preparer that you work with or your site local coordinator. And hopefully you'll do some practice with problems and you'll be all set to go for the tax season.